I think we are in for a couple of months of uncertainty and volatility, and that's for two main reasons. One is that the markets are trying to figure out how much the US is slowing down, and two is there's that big risk event of the US election. But if I take both of those in turn, first, the US to us looks like it's in a soft landing, not a recession. A few reasons for that. One, the last employment report might have been made to look a little bit worse due to temporary factors, some weather impacting temporary layoffs. If you look at the data, it looks a lot more like it's a soft landing. And finally, if you think about what's really weighing on the US economy, it's been high yields, high interest rates, and those are about to start coming down. And then onto the election, while it's impossible to predict what's going to happen, generally the market reaction is quite predictable. You get kind of choppy and sideways trading going into it. That's in keeping with the volatility that we're seeing now. But afterwards, you tend to get a strong rally into the end of the year. And given the good fundamental backdrop, the fact that the Fed is going to start cutting interest rates, we think that's the playbook to follow.
Okay, so look, I understand the cuts to come, I understand the soft landing, but what's got investors so spooked right now? What's driving these declines? We mentioned earlier that it's chip makers dragging the Asian stocks lower on that huge Nvidia loss from overnight, the biggest one-day decline in market cap for a US company in history. I'm just curious to get a sense from you about what you think is actually driving that valuation reset, and as an extension to that, is it a buying opportunity now?
Sure. So some of the market darlings, or the things that have been most loved as part of that AI trade this year, things like Nvidia, as you said earlier, still up about 118% year to date. The S&P Tech Index had made an all-time high in terms of its PE valuation. So there is certainly room on days when markets are having a bit of uncertainty for meaningful correction in some of these well-owned stocks. However, if you look at the kind of average, the S&P equal weighted stock, it's still at its 10-year average in terms of valuation. There's not much exuberance priced in there. So that's a place that if you kind of keep it boring and go for that kind of middle part of the US stock market, there's a little bit of comfort there. Or to bring it to Asia, Korea has sold off in sympathy today. But despite the huge gains in terms of Korean exports this year, in terms of new highs, in terms of earnings forecasts, Korean equities are slightly down for the year. So, there are dips that you can buy and that we're looking to take advantage of.